Man, what a wild 24 hours this has been for the markets. We saw a rally leading into close yesterday where Trump would give his announcement on the latest updates in Iran. But as soon as the announcement began, we saw a lot of things start to tank immediately. The S&P dropped about 1.2% over the next couple of hours right after Trump gave his announcement. Bitcoin down about 3.5% almost, and gold selling off to maybe about 7 or 8% here. I've been really interested in tracking these three things lately, the S&P 500, Bitcoin, and gold, because I think it gives us a pretty good sense of what the market thinks about the economy overall and what types of changes we might expect to see. Of course, oil is up a bunch too, since that's one of the major commodities that's going to be supply limited based on recent events. It seems like the market was anticipating some different news than what we got today. Trump had said that we had basically destroyed Iran's navy. It said that we had destroyed a number of other targets as well and achieved a pretty significant military decisive victory. However, the Strait of Hormuz is still contested right now, so a lot of shipping can't go through. I think 20% of the world's global oil supply goes through the Strait of Hormuz, but Iran is attacking any ships that try and pass through there, which means that it's effectively shut down. It's simply too dangerous. The risk premiums are too high for the ships trying to navigate through. Trump did not necessarily give a plan, at least as far as I could detect, on what would happen with the Strait of Hormuz. I think he said that there is a natural incentive to reopen the strait so that the global economy can flourish again. However, without a specific plan, it kind of leaves a lot on the table here. I think the market was hoping for some sort of action plan or some sort of next steps, but he's basically saying things are just going to happen naturally. I think it leaves a lot to chance. It leaves a lot up to other actors. It's an extremely permissive stance. And although we might be right that Iran does have an incentive to reopen the strait, we can't be sure of all the incentives that are there. It's possible that people have different goals than we anticipate, and it leaves room for unexpected things to happen. When you're in a powerful position, you want to be pressing your advantages, not abandoning them. You can watch a really good breakdown from a military and economic perspective. It was actually a couple of my favorite YouTubers all together, but I'll put the link down in the description. But it's with Cappy Army, Justin Taylor, and I think it's Pyrrhic. So I think you'll really like that if you're interested in this update today. So please check that out. This morning we saw a number of stocks rallying back to kind of previous close or pre-Trump's announcement here. So pretty volatile. We're seeing a big drop right at about 7 p.m. Mountain Time yesterday, followed by a very big rally. Back to baseline for most things. It's looking like gold didn't quite make it back, but S&P did. Actually, Bitcoin is starting to rally too, but nowhere near yesterday's close. I can't say I'm surprised by that. What is really surprising though is that we see gold and Bitcoin and S&P all moving in the same direction. I would expect that if there's panic, we'd see an increase in gold price. But in this case, it's moving pretty closely with the S&P, at least visually, which I found very interesting. I also wanted to show you this prompt that I put into Grok not too long ago. I asked it to perform principal component analysis, PCA, on a few different ETFs. One of them was TQQQ. It's supposed to track to 3 times the daily change in the S&P 500. We'll get to the numbers in just a bit here, but you can see that it came back and said that some of the strongest correlates are going to be like interest rates, tech earnings, tech growth, economic growth generally, overall risk sentiment in the market, as well as the strength of the dollar. So here it's coming back to me with some numbers. It's telling me that 48% of TQ's movements are attributed to either the 10-year Treasury bond yield or the volatility index with actually a negative correlation, meaning volatility goes up and TQs goes down. I think you normally see that as kind of market panic. And then the last one is the strength of the dollar. I had to perform the same analysis on GDXU, which is a leveraged ETF that tracks gold miners. So it's the mining companies themselves, not just strictly gold. It came back and it gave that 31% of GDXU's movements are correlated with the following 3. One of them, again, is the 10-year Treasury bond yield, also with volatility, although volatility tends to increase the value of gold. it gave a positive correlate, and then strength of the dollar is a negative correlate, meaning gold gets stronger as the dollar gets weaker. No surprise there. And then I had it perform the same analysis again with Bitcoin, except I used ticker BITU, which is a leveraged ETF, which tracks Bitcoin. It's basically 2x the daily movement of Bitcoin here. They gave 3 correlates again. It's the same 3 correlates. They said it makes up for about 42% of Bitcoin's movement. So this is showing a negative correlation with the 10-year treasury bond. So as yield goes up, BITU is going down, but smaller magnitude here. There's also a negative correlate with volatility, and this is stronger. So Bitcoin is going to be more sensitive to the volatility index. And then there's a negative correlation with the strength of the dollar. So as the dollar gets weaker, Bitcoin gets stronger. And then I had Grok put all this in a quick table here so that we could look at it all pretty concisely. From here, since we see that things are kind of all moving in the same direction, I can just scan down the list and I can see which things are all correlated the same. Under what circumstances are they all going to move together? And there are a few line items where they're either all positive or all negative, and those will move together. It's also possible that we see like a combination of things where there are multiple effects that are stacking together to create a net effect of things all moving in one direction overall. So I thought this was a pretty interesting exercise for gauging how the market is feeling about the latest announcements. Thank you so much for tuning in. If you liked today's episode, please like and subscribe, and let me know what you think down in the comments below. Please also click the link if you're interested in seeing some of my favorite YouTubers respond to Trump's announcements.